Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Happy Saturday, April 18th, 2026. This is the week in review, and I have to tell you what a difference a week makes. Last Saturday, I stood right here and told you that the Strait of Hormuz had been closed for more than a month. I told you Brent crude was above $100 a barrel. I told you stagflation was the skunk at the party and the Fed was trapped. Sorry about that. Just want to make sure we were still live. During the headlights, the conversation was about protecting capital, not chasing alpha. Now, before we start, BuzzPulse is a social intelligence tool. Everything you hear today is data and commentary, not investment advice. I'm not your financial advisor, so please do your own research before putting any money anywhere, okay? 7 days later, the S&P 500 just hit an all-time high. The Nasdaq cleared 24,000. Oil plunged 11% yesterday in a single session, and our model portfolio has 24 signals tracked with zero stop outs. That's not a typo. Zero. Today we have a lot to cover. BuzzPulse just locked in on bull as the signal of the day with 11 convergence layers firing. So my actually my engineering guy didn't show up today, so I'm just going to hold this up and let you see. There's bull. That's the dashboard that you can sign up in the comments below, and you can get access to all this inside information. But it's not really inside information because it's all completely available for you to take a look at right now. So anyway, bull is the signal of the day with 11 convergence layers firing. Bull is a mid cap Russell 2000 name trading around $6.72. I'll walk you through exactly why we've got Bull targeted like this. And I also need to talk to you about what happened overnight because the story of this week is not as clean as the headline suggests. Iran reopened the strait on Friday, but as of this morning, Saturday morning, they've closed it again. So I'll explain what that means for Monday's open later on in the show. Now, our model portfolio is outperforming the Russell 2000 by 4.5 points year to date. It's still zero top outs. I'm going to show you the numbers later on. And in today's BuzzPulse University, I want to revisit last week's call. AMC Entertainment, our signal of the day on Friday, and show you how it played out across 5 trading sessions that followed. Because a setup is easy, but being honest about how it performs is a little bit harder. So let's get into it. Story number one, the S&P 500 closed Friday at a record high. The Nasdaq Composite hit its third straight week of big gains, the longest such streak since Halloween. The Dow jumped nearly 700 points in a single session. This was the third consecutive week of major gains, and the catalyst was the Middle East. Now, on Friday morning, Iran's foreign minister announced that the Strait of Hormuz was fully open for commercial assets. U.S. crude tumbled subsequently 11.4% to $83.85, the second largest one-day drop since the war began. Brent dropped 9%. Heating oil fell 10%. Wholesale gasoline futures dropped 5%. This is the biggest energy unwind since the crisis started February 28th. And equity markets did exactly what you'd expect. Record highs across the board. Treasury yields dropped as inflation pressure eased. The 10-year yield fell from 4.32 down to 4.24. Europe's markets rallied even harder. France's CAC 40 came up 2%. Germany's DAX up 2.2. Now, story number two, and this is where Saturday morning whiplash comes in. Friday night, President Trump clarified that the U.S. naval blockade against vessels departing from Iran ports would remain in effect despite the reopening. Ships started turning around in the strait. And this morning, Saturday, April 18th, Iran announced they are closing the Strait of Hormuz again in response. So here's where we are at. Markets closed at record highs on Friday, pricing in a diplomatic off ramp. Hours later, that off ramp closed. Monday's open is going to be a test of how much that rally was real optimism versus headline chasing. Futures don't trade on Saturday, but I would not be surprised to see a meaningful gap down at the Sunday evening session. What I want to have you take away from this is simple. The market rallied 10% in 3 weeks on the hope that this conflict would end. Now, hope is not a strategy. The underlying situation, a regional war, a naval blockade, a contested choke point carrying 20% of global oil, has not fundamentally changed. The price action got ahead of the facts. Story number three, earnings season has started strong. Several large financial companies delivered bigger profits for the first quarter than analysts expected. That has been a real support for the rally beyond geopolitical headlines. But we still have a cautionary tale. Netflix opened Thursday night. Then they reported earnings and they beat on revenue on $12.25 billion. They beat on earnings per share. The stock still dropped 9% the next day. Two reasons. A big chunk of earnings came from a $2.8 billion termination fee on the Warner Brothers deal falling through. Strip that out, and the quarter looks less impressive. And their Q2 guidance was light. The lesson for next week and for the next several weeks of earnings is that beating expectations is now the minimum. You have to beat and guide up. Beat and guide flat, you get sold. And that is the level of euphoria we're dealing with at these price levels. The VIX closed the week at around 17.5. That's actually down over 9% in 5 days. Fear is leaving the equity markets. Whether that is justified going into next week is a very good question. This morning, BUZZPULSE scanned 37,300 stocks and over 16,000 crypto tokens. It filtered out every mega cap, every ETF, every obvious name, and the asset that scored highest on independent confirmation layers was BULL, a mid-cap Russell 2000 name trading at $6.76. 11 convergence layers fired. Conviction level is moderate. Signal direction is bullish. Now, what is interesting about bull this morning is the depth of the convergence rather than any signal headline. There's no specific catalyst narrative driving up attention today. No earnings, no analyst upgrade, just M&A rumors. Just a cluster of independent data layers all pointing the same direction at the same time. Buzz Surge Z-score of 9.5. That means social attention on this name is more than 9 standard deviations above its historical baseline. That's not a normal spike. That is an extraordinary event. Momentum is confirmed, and price action is followed the attention, not leading it, which is the pattern you want to see. Now, sentiment on the conversation is plus 0.38. That is meaningfully positive without being euphoric. When the sentiment runs above plus 0.5, I start worrying about retail FOMO driving the tape. Plus 0.38 is the sweet spot where people are paying attention but not yet frothing at the mouth. Now, options intelligence is what makes this one particularly interesting. The IV rank is at 25%. For anybody new to the show, IV tells you exactly where implied volatility is sitting relative to the past year. 25% means options on bull are historically cheap right now. Translation: the options market has not fully priced in what the social data is saying. And unusual options activity confirmed institutional positioning. That combination, unusual flow at low implied volatility, is the pattern you see when big money is loading before a move, not chasing after one. The name showed up in broader squeeze discussion on social platforms this week, and I want to be very clear here. BuzzPulse is not telling you to buy this. BuzzPulse is telling you that 11 independent data layers all say something is building. Whether that something resolves in a move up, a move down, or a nothing burger is not the signal's job to predict. The signal's job is to surface what the market is talking about before the price fully reflects it. That's what discovery looks like. So the risk here is standard for mid cap Russell 2000 names. Lower liquidity can amplify swings in both directions. If the market gaps down on Monday on the Hormuz reclosure headline, bull will move with it, maybe faster. Position size accordingly if you engage at all. Watch for continuation if Z score holds above 8 and sentiment stays positive. If options activity accelerates while IV stays compressed, that is institutions loading up before a move. If the Z score collapses before 5 or sentiment flips negative, the setup is broken. And that's how I evaluate it. Now, let's look at what else BuzzPulse watch list today. These are the top greed score assets that pass the quality gate behind bull. First up, BlackBerry, ticker BB, mid cap, greed score of 0.550, Z score of 15.6 with momentum confirmed and sentiment at plus 0.47. Stock is at $4.86. The catalyst layer is thin today. The social chatter is philosophical. Portfolio speculation with no direction or clarity, which means that this is pure social surge driving the signal, not a news event. IV rank is not available today, but unusual options activity is flagged, which tells you institutions see something worth positioning for. BlackBerry has been a meme adjacent name for years, so when social attention spikes this hard with confirming momentum, you're looking for potential for fast moves. Watch for volume confirmation on Wednesday's look for volume confirmation on Monday's open. Second, CLSK. That's Clean Spark, mid cap Bitcoin mining name. Greed score of 0.540, Z score of 9.5 with momentum confirmed and sentiment at plus 0.54. The stock is at $11.97. The catalyst here is a peer evaluation argument circulating on social platforms. The thesis is that CLSK is trading at a meaningful discount to comparable Bitcoin miners, and that the gap could close if Bitcoin holds above 75,000. Whether you agree with this thesis or not, the convergence data confirms that traders are paying attention to it. CLSK is a Bitcoin miner, so you're getting indirect crypto beta without the spot volatility. Bitcoin is holding around 75,600 this morning. If BTC breaks through the 75,000 as resistance, the miners move with it. Watch whether MARA and RIOT show similar convergence patterns. If the sector is rotating, you'll see it across all three names. Third, BBAI, that is Big Bear.ai, small cap artificial intelligence play, greed score of 0.21, Z-score of 8.5 with momentum confirmed. But sentiment is near neutral at plus 0.07. That's the weakest sentiment reading in today's top five. So this one requires extra caution. Stock is at $3.85 with earnings on April 30th. Just 12 days out, unusual options activity shows institutions are positioning ahead of the print. This is a classic pre-earnings setup. Social attention is building, options flow is active, and the event catalyst is close enough to matter. The risk is that neutral sentiment, if social mood does not shift positive before the print, this could gap either direction on results. Watch sentiment closely over the next week. If it moves toward 0.3 or higher, the setup gets stronger. If it stays flat or turns negative, this becomes a gamble, not a signal. Fourth, RIOT. That's Riot Platforms, mid-cap minor, greed score of 0.495, Z-score of 7.2 with momentum confirmed and sentiment at plus 0.36. The stock is at $18.11. Short interest on RIOT is at 14%. IV rank is at 63%, which means options are mid-price range. Not cheap, not expensive. Unusual options activity confirmed. The catalyst narrative is revealing. Shorts are maintaining positions despite pressure, which suggests the market is waiting for an external catalyst to resolve the setup. This is a potential squeeze play, but it's not confirmed yet. Earnings are April 30th, same day as BBAI. So if you're looking for a 12-day window for the setup to mature, if short interest stays elevated and social attention continues to build into this print, you could see forced covering if results surprise. The trade here is patience. Let this setup develop. If the sentiment shifts positive and the Z-score climbs above 8 in the next few sessions, the squeeze probably increases. When three mining related stocks show up in the same watch list, CLSK, MARA implied, and RIOT, that's not random. That is the market positioning around Bitcoin breaking resistance. Now, let me show you something I'm really proud of. This is the BUZZPULSE model portfolio. Every single of the day tracked mechanically, $1,000 per trade. I'm going to show this to you right here. You can pull this up right now if you look in the description, right? You've got the link down there. That's the signal of the day, and it's tracked mechanically, right? $1,000 per signal, 8% stop loss. So anything that goes down gets cut out, okay? No discretion, no emotion, no cherry picking, just data. Now, as far as the portfolio alpha, plus $2,580 through Friday's close. Total portfolio value, $75,580. 24 signals tracked, BuzzPulse year to date, plus 11.8%. Now, compared to the Russell 2000 year to date, they're at 7.2%. That's 4.6 points of outperformance for BuzzPulse above the benchmark, okay? And here's the number that matters most. Positions stopped out, 0. 24 signals, 0 stop outs, not one. The quality job at BuzzPulse is working. Nothing's been sold, okay? So let me walk you through the top 5 winners. Number 1, MARA, Marathon Digital, entered March 28th at $8.02. Current value, $1,440, right? That's a 44% return, okay? $1,000 turned into $1,440. Now, number 2, right? ANC entered April 6th at $1.12. Current value $1,438. 43%, 43.8% return from listening to BuzzPulse. Okay. Thank you. You're welcome. Number three, Mara again. Entered April 3rd at 8.71 and up 32.6%. Now, number four is Run. Entered April 7th at 494, up 29% because of BuzzPulse, okay? Because they were listening, they bought the BuzzPulse suggestions, okay? Remember, past performance doesn't equal future results, okay? Number five, RUN again. Run. Purchased April 2nd at 501, up 27.5% from listening to BuzzPulse, okay? And let me give you Friday's entry too. QBTS, D-Wave Quantum, our signal of the day yesterday entered at $20.81. It closed yesterday, Friday, at 21.69. That's a 4.2% move in a single session from listening to BuzzPulse. The quantum computing rally continued this week. NVIDIA's new Icing quantum AI model is still driving the entire sector. QBTS up roughly 54% for the week alone. Now, every signal service cherry picks winners. They show you their home runs and hide strikeouts. At BuzzPulse, we don't do that, okay? This is every signal tracked live on a public dashboard. Go to buzzpulse.h9ksystems.com/dashboard right now to see it yourself. The wins and the losses are all there, okay? I'm not showing you this to brag. I'm showing you this because my transparency is the product. If I'm going to go ask you to trust a machine scanning like over 50,000 stocks and crypto coins every night, you deserve to see exactly how it performs, okay? Not in a back test, not in a pitch desk, live every day. That's what we give you. So now let me do the actual thing that really matters. Let me grade last Friday's call, a week from today, the 11th. If you look at April 17th, BuzzPulse locked in on AMC Entertainment Holdings as a signal of the day. Entry price was $1.61. 11 convergence fires, 11 convergence layers fired. The thesis was built on AMC posting the strongest 5-day Easter box office performance in the company's 106-year history. Plus the Super Mario Galaxy movie opening at $372 million globally, plus a $425 million credit for facility financing through its Odeon subsidiary. That was Friday morning signal. The market had one trading session to react, Friday itself, and then the weekend. As of Friday's close, AMC was trading higher on the session, riding the broader market rally. The signal is in the green and the thesis is still intact. But I want to be very clear about something. One day of green action does not make a signal right. What made the AMC call credible was not whether it went up on Friday. What made it credible was whether the data layers continued to confirm through the weekend. If the Easter box office numbers were a 1-week sugar high, the signal decays. If the refinancing is followed by a cleaner balance sheet narrative, the signal holds. This is the discipline. A signal is not a prediction. A signal is a snapshot of what the data is saying on a specific morning. I will check back in on the AMC later this week on the daily show and let you know if the layers hold or if they fade. If they fade, I'm going to tell you too, okay? If it hits 8% stop, I'll tell you that too, because If I can't be honest with you about my misses, I don't deserve your trust. All right, now let's have some fun. What is the internet arguing about this week? First up, the New Bird AI story. Remember Allbirds, the sustainable shoe company? That one was worth $4 billion back in 2021. By last week, it was worth 21 million. Then they announced they're selling the shoe business for $39 million and rebranding it as New Bird AI, a GPU as a service company. The stock went up 582% in a single day, and then it crashed 30% the next day, and it's still falling today. They are literally removing their environmental conservation commitment from their corporate charter. Sustainable wool shoes to energy guzzling AI servers. That is peak 2026 in one corporate filing. Sustainable wool shoes might not cut it. This is the blockchain. This is the blockchain 2.0. Back in 2017, Long Island Iced Tea, rebranded as Long Blockchain Corp, went up 380% in a day, and three people eventually got charged with insider trading. The stock got delisted, and I'm not saying New Bird AI is a scam, but what I am saying is that history rhymes. And this is clearly the kind of thing that BuzzPulse pump warning system is designed to flag. If a name spikes on a name change rather than on fundamentals, if the only thing that charged, if the only thing that changed is the words on the corporate filing, the pump warning tends to fire. The legitimacy score drops. The signal does not make the watch list. That's the quality gate working as designed. Now, second story, the pattern day trader rule died on Tuesday. The SEC killed it. We're now 4 trading days into the new regime. That $25,000 minimum that locked small traders out of the day trading is gone, replaced with real-time risk-based margin requirements. Robinhood stock is up over 15% since the announcement. More people can now day trade. Whether that is good for them is a different conversation. My view, and it is a view, not a recommendation, is that most new day traders will lose money far faster in this new regime than they would have under the old rules. Keep watching BuzzPulse. Friction was a feature, not a bug, for people who are ready to trade their own money. But if you are going to trade, you need better signals than your gut feeling. And that's literally what we built BuzzPulse to do. Now, the third story is Bitcoin. It's sitting at 75,600 right now. BTC dominance is at 57.3%. That is altcoins underperforming the king. The crypto fear and greed index is at 23. Extreme fear. Stocks are at all-time highs and crypto is terrified. Morgan Stanley just launched a spot Bitcoin ETF that pulled in $100 million on its first 6 trading days. Charles Schwab launched a crypto trading platform this week. Institutional money is pouring in. Retail is scared. Institutions are buying. When that divergence happens, historically, you can guess who ends up being right. Now, today I want to talk about something I've not talked about enough, the convergence check and why it's the most important part of the signal. People always ask me all the time, hey, Ken, how do you pick the signal of the day? And I always give them the high level answer. Scan over 46,700 stocks, score them, run the quality gate, lock the highest convergence at 1 a.m. Pacific time. But the core of the whole thing is the convergence check. So let me explain exactly how that works using Bull this morning as the example. BuzzPulse looks up over 36 independent layers of confirmation on every candidate that passes our quality gate. 25 layers. Some of them are social, How many mentions, which platforms, what's the sentiment? Is the attention accelerating? Some summer market price momentum, volume confirmation, relative strength versus the benchmark. Summer options, implied volatility, rank, put call ratio, unusual activity flags. And some are fundamental, short interest, insider trading, earnings proximity, ex dividend dates. Some are macro, VIX regime, BTC dominance for crypto sensitive names, sector rotation. The point is that no single layer is decisive. A stock with a high Z score alone is a social mention spike. Could be real, could be a pump. A stock with unusual options activity alone could be hedging, not directional positioning. A stock with strong momentum alone could be an overnight or an overbought name waiting to correct. Any one signal in isolation is just noise. But when 11 of those 25 layers all fire at the same time, social attention spiking, momentum confirmed, sentiment positive, options cheap, unusual flow, and so on, that's not a coincidence. That's convergence. 11 independent data sources all independently saying the same thing. Think of it like a courtroom. One witness can be wrong, two witnesses can be coordinated, but when 11 independent witnesses, each of them operating on completely different data, all give the same testimony, the case gets strong. Now, BULL this morning had 11 layers fire. That's moderate conviction. Our all time high was 14 layers on a crypto signal back in February. On a normal trading day, 8 to 11 is the typical range for the signal of the day. 9 is the median. Below 7, nothing qualifies, and we go to template B, the no signal day. The reason I'm walking you through this is that I want you to understand why the system is worth your attention. Not because I'm clever, not because I have a hot take, because 37,700 stocks went through its 5-step process every 6 hours, and one name scored highest on 11 independent confirmation layers. The machine does not care what I think, and neither should you. The machine cares about what the data says, and that's the entire point. Before we go, here's what I'm watching next week. First is Monday's open. We just talked about the Hormuz Whipsaw. Friday closed at record highs on the reopening. Saturday morning, Iran closed it again. Futures do not trade this weekend, but Sunday evening is going to tell us what the market thinks. If we gap down 1% or more on the S&P, that is the market admitting the rally was built on hope. If we hold firm, that's the market saying earnings and Fed expectations are carrying the water regardless of the Middle East. Second, oil. Brent dropped up from above about 100 to about $90 yesterday on Friday. If the Strait stays closed this week, oil will reprice back toward 100, and that will reignite every stagflation concern I talked about last Saturday. Energy stocks will rally, growth stocks will sell off. The Fed trap tightens again. Now, third is earnings. Comcast reports April 24th. BBAI and RIOT both report April 13th or April 30th, pardon me. The rally has been supported by a strong financial sector earnings. If that extends to the tech and consumer names, the S&P can hold 7,000. If not, we'll find out how much of Friday was real. Now, fourth, BuzzPulse specifically recommends bull because bull needs sentiment to hold above 0.3 and z-score above 8 to remain in the portfolio without hitting the stop. I'm going to check back on Monday morning show with the overnight update. Now, if you got value out of today's show, hit the subscribe button. We do this every single day. Saturdays are for the week in review. The rest of the week is your daily signal of the day briefing. Signal of the day drops every morning at 5 a.m. Pacific. Free 7-day trial. Link is down in the description. That the live BuzzPulse dashboard is at buzzpulse.h9ksystems.com/dashboard. Check it out right now. Every signal I mentioned today is there live. Every position in the portfolio, every stop loss, it's free to look at. Remember, BuzzPulse tells you what the market is talking about and whether that attention is unusual. It doesn't tell you to buy or sell anything. That's your call. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.